Hey everybody, Rob Maurer here, and today we are talking about the wide release for new features for Tesla's Autopilot system, as well as some news on China, a note from Baird on Tesla stock, and some guidance updates from Mitsubishi. Tesla stock on the day today did finish up 2.8% to $725.15. That compared to the Nasdaq up 1.7%. Alright, so we do have some exciting news breaking this afternoon. Tesla has started to wide release Firmware version 2020.12.6 firmware, which is the first wide release, meaning outside of the early access program, of firmware containing the traffic light and stop sign control beta. I think Redditor Mr. John Moreno was the first to post about the release this afternoon, sharing the release notes, which I won't read through, but here they are on the YouTube video. We have, of course, talked about this feature before, but it is super exciting, so I wanted to talk a little bit more in detail about it today. So just as a quick reminder, this feature allows Tesla vehicles with the full self-driving software option to stop for traffic lights and stop signs. Tesla is releasing this, as they often do, as beta software, and in this beta software the car will prepare to stop for every light, regardless of whether it's red, yellow, or green, and it will require the driver to indicate that they would like to continue through. So driver confirmation is still required here to an extent. If you do not give that confirmation, the car will stop regardless of the color of the light. But I think this is a very safe and smart way to release this feature. It's going to work incredibly well for Tesla to capture and correct false positives for red lights, and reduce the risk for false negatives since the vehicle would be stopping anyway. The only downside of this implementation option is the potential for unexpected stops, but because of the warning ahead of time, ahead of those stops, the responsibility for any stops at a green light, for example, would definitely fall on the driver. Personally, I love that Tesla does this. They don't wait until the feature is perfect to allow users to benefit from the functionality of that feature. But it's not just the users that benefit. Tesla also benefits here as they can collect data. This implementation is extremely similar to the implementation we saw for automated lane changes with Navigate on Autopilot initially. For that feature, at first, Tesla required drivers to confirm a suggested lane change by hitting the turn signal, but over time, as Tesla gained confidence in the feature, they changed that to quote-unquote no confirmation lane changes. I say that in quotes because in reality this pretty much still requires the normal autopilot nag of apply force to the steering wheel before it'll make a lane change. But the development path is very clear there and similar to what Tesla will do with this traffic light and stop sign control feature. They implement the feature and slowly, over time, remove the driver as the system acquires data and becomes more confident as the drivers facilitate that training process. And you'll notice I said slowly remove the driver there. Well, as Tesla's fleet grows and functionality improves and the dataset grows and becomes quicker to grow, Tesla's understanding and ability improves as well, then we should see that rate of progress for slowly removing the driver become quicker and quicker. That aspect is something that I think a lot of people underestimate, and I think that Elon and Tesla also believe a lot of people underestimate. So I'm extremely excited to see this feature roll out, and I think the way that Tesla is doing it makes a ton of sense. Don't be too sad if you don't have the update available yet. Teslafied.com tracks these firmware updates, and right now only about 100 vehicles in their dataset have this new firmware, 2020.12.6. So a little less than 1% of their users at the time of recording, so we'll just have to see how quick the rollout happens. Now shifting to the impact on the business, I expect this to be pretty significant. As we have talked about, Tesla said in their annual filing in February, the 10K, that they expect to recognize $751 million in deferred revenue over the next 12 months. A decent chunk of that deferred revenue is from full self-driving features that have not yet been delivered, and this would check one of those boxes. As Tesla delivers this to more and more vehicles, they can recognize more and more deferred revenue. Because we're in the beginning of Q2 right now, I would expect most users that are waiting on this functionality with the full self-driving option purchase, at least in the United States, will receive this functionality this quarter, allowing Tesla to recognize a decent chunk of that $751 million of deferred revenue. How much of that deferred revenue is anybody's best guess. Remember, we had a similar situation with Smart Summon, and I think revenue recognition from that was lower than expected, but for this feature, I wouldn't be surprised if Tesla was able to recognize $100 million plus of deferred revenue. That will obviously help the financials for Q2, not from a cash flow perspective, but from a profitability perspective. That will be nice, obviously in a quarter where production has been shut down for a third of the quarter. And then there are a couple of huge knock-on effects here to Tesla deploying this feature. The first is sort of on that deferred revenue thought process. Tesla has been having to defer revenue because they have not had this feature released. Now with this release, going forward, they won't have to defer the revenue meaning Tesla can book that margin right away. So we get an instant boost to margin, which a lot of people probably aren't thinking about. But the margin benefit doesn't stop there, because this feature is compelling and should increase the number of buyers opting for the full self-driving package. That increases both margins and revenues from an average selling price perspective. The developed feature set also gives Tesla more pricing power for that option, which Elon said they would take advantage of, noting on Twitter in early April that they would likely be increasing the price of the full self-driving option around July 1st. Of course, the increase to the price of that option would lower the take rate, meaning the impact to revenue and margin would remain to be seen. But overall, this feature improves both of those things. The other question this brings to mind, at least for me, is whether or not there are any other improvements to Autopilot functionality in this firmware. Sometimes we see the functionality change from version to version without being specifically mentioned in the release notes. So with such a significant update, it will be interesting to see people's reports on that. I do wonder if this is tied to the core Autopilot rewrite that we have heard so much about, or if we still have to wait a bit for that. I did add another question on this to say.com. If people want to upvote this, I'm a little bit on the fence on it, because I kind of expect Elon to address the core Autopilot rewrite anyway, but it's kind of risky because if he doesn't address it, then it was a missed opportunity. So I am putting it out there. If you want to upvote it, you can go ahead and do that. The link is in the show notes. The question that I have asked is, quote, could you provide us with an update on the progress of the core Autopilot rewrite? Does the recent release of traffic light and stop sign control in Firmware 2020.12.6 leverage the rewrite either entirely or partially? Thanks and congrats on the progress. So if you want that to be upvoted, it's there. Again, I'm kind of neutral on it, and it's a bit late in the process at this point, but if anybody can do it, we can. But as of right now, the top 5 questions are looking pretty good, so thank you all so much for the help with that. Next up today is a continuation on our discussion of prices for the Model 3 in China. Tesla has now updated the design studio to reflect prices with a different subsidy amount, and at least for the time being, this has led to a 4,500 yuan increase on the Standard Range Plus Model 3 and a 5,000 yuan increase on the long range single motor non-performance. There's apparently a 3-month transitional period here for these subsidies before they go away. And it's important to note that Tesla has not increased the pre-subsidy prices here. This is all a matter of how they're reflecting the subsidies on their site. But for now, that's about a $635 increase on the SR Plus and about a $700 increase on the long range. Next up today, we have an updated analyst note from Baird, analyst Ben Kallo reiterating his neutral rating on Tesla stock, but also pointing out something that I've kind of been pounding the table on here for the last couple of weeks, that Tesla's lead in electric vehicles is only likely to increase in this macro environment that we're in right now. MarketWatch says, quote, the recession created by the coronavirus pandemic is likely to help Tesla Inc. extend its advantage in electric vehicles over the major car makers or original equipment manufacturers, which may be forced to delay their own electric initiatives, Baird analyst Ben Kallo said on Friday, end quote. He also justifiably expressed concern over the cash flow impact from the inventory overproduction versus deliveries in Q1. We've talked about that, but also noted that that provides upside for Q2. Many of you have been asking if I'll be doing an earnings preview episode. Well, of course I'm doing an earnings preview episode. That'll probably happen on Monday. Next today, we do have updated short interest on Tesla stock. This is for the April 15th settlement date. Short interest continued to increase, albeit only slightly, from the March 31st report, which short interest was about 19.7 million shares. This time coming in at 20.1 million shares, so about 40,000 new shares sold short. Tesla stock over that same period of time rose from about $524 per share to about $730 on April 15th. Our next official short interest update will be after market close on Monday, May 11th for the April 30th settlement date. Lastly today is another profit warning. We had previously discussed warnings for Q1 for Ford and Volkswagen. We now have one from Mitsubishi, though it is for their fiscal year 2019, which ends on March 31st, 2020. So their fiscal calendar a bit shifted from the normal calendar. But converting from Japanese yen here to US dollars, their previous forecast for profit had been $278 million for the year. They've lowered that to $111 million, so more than a 50% reduction. And this is down from fiscal year 2018's operating profit of right around $1 billion. So an 89% decrease year over year. And remember, the coronavirus situation was only impacting Mitsubishi for the last, let's say, 3 months of that fiscal year. I should clarify too that this is for Mitsubishi Motors, not the entirety of Mitsubishi's business. But that operating profit down 89% year over year, that was on sales down just 10%. I haven't gone under the covers to see what was driving that operating profit decline, but you can see the fragility of the profit for these automakers and the downsides of economies of scale when the declines in profit far outpace the declines in revenue. Mitsubishi also generally issues a dividend twice a year. They cut their dividend for the second half of the year to 0, meaning their dividend was down 50% for the year from last year. Overall, just more indications of tough sledding even heading into this whole macro environment situation for 2020. That'll really wrap it up for the day and for the week though. If you like what I'm doing here, you can check out patreon.com/Tesla Daily Podcast to support it, or just make sure you're subscribed and sign up for notifications and following me on Twitter @Tesla Podcast. Have a great weekend, everybody, and I'll see you on Monday for the April 27th episode of Tesla Daily. Thank you.